Good morning. My name is Carol Harmer from the International Trading Institute. What I'm going to talk to you about this morning is looking at patterns and how they work in financial markets. Now, obviously there are too many patterns for me to go through in one video. So when you come on our course, obviously this is one of the areas that we're going to teach you and get into your brain, because whatever else you use, these patterns that emerge throughout the day, throughout the week, throughout a 4-hour chart, throughout even an hourly chart. These patterns are always popping their little heads up, and they really are a helpful guide. They are probably one of the most important things that you should learn about, because once you begin to understand patterns and the way they work, it will really help your trading, because you'll be able to see these patterns emerge, preempt them and trade accordingly, which is what most of us do, to be fair. So I'm going to show you the oil chart, which is something that I looked at a few weeks ago, and you can find it on our site. If you go on to Wti, you can find it where we saw this pattern being in the making, how we talked about it. So if you can see here, this area here, okay, this made a classic double base. So the market had come off from quite high levels. If you can see, I'll just push it back again just so I can get it into context. So you can see that we really were coming from quite good levels on the downside, and the market has fallen quite a bit. So we looked at this area here, okay. You've got one on April the 9th and you've got another one on the 2nd of May. Both had the exact same value. Now, if you see something like this working through, this is also what we call a continuation pattern. Now, as the immediate trend was down, and you had the continuation pattern there, and a continuation pattern is really a series of higher highs and higher lows within the move lower. Then you look for the fall. As you can see, we were capped by resistance, but we were also capped by the 200-day moving average. Obviously, you can't trade off of a 200-day moving average, but they are there to help and guide you. So I put them on charts just for that reason, no other reason apart from if the market edges towards a 200-day moving average, the big guys are going to come in. So you've got this continuation pattern here, okay, within this immediate downtrend. So when we did this again within this downtrend, so down we come, you go up, you hit a level, didn't go above these two bases here, you can see that quite clearly, and then it's on its way down. This is where you act, whether or not you believe in these patterns. It's very, very difficult to ignore them because they work, and anything that works over a period of 40 to 50 years, if it's not broke, don't fix it. That is my basic motto, my mantra, if you like. This is my mantra. If it's not broke, don't fix it. Now, there are obviously loads and loads of different ways that people analyze markets these days, and I would be remiss if I didn't mention that. There are, but when you are starting off, and if you want to make a career in trading, which hopefully you all do, but if you want to make a career in trading, what you need to do is you need to be able to act like a professional trader. You've got to work like a professional trader. And professional traders, I'm not talking about people in the retail market, I'm talking about professional traders. They look at these. I know, I was one. And even bank traders look at these, because you've got strategic desks, you've got people that trade just on patterns, you've got so many people looking at these markets this particular way. that it really is beneficial to, when you're starting off, to be aware that these patterns exist, because if you're not aware of them, then you're going to get caught in the noise of, oh my god, it's going down. You can see on oil that the market actually produced an exceptionally good double base. We went up, we didn't go through this resistance, we came down. This is where you act, in this area here. Why? Because you've got a stop. If the market breaks below this level here, okay, which is 56.31, if it breaks below here, or 55.30, you, especially as the market is like oversold, if it breaks through here, then there's your automatic stop, 50, 60 points lower. It's a very good risk reward trade. Now, what you will be taught by various people, I'm sure, what you will be taught is that you should only trade the breakout of a double base. I don't adhere to that school of thought, unfortunately. I never have. Okay, I think that trading is risky. I think that if you understand the markets and you can see these patterns forming, it's a low risk trade, even though you feel that everybody's selling, okay, and everybody's talking the market down. This is your reversal. So what you can do is you look and you see whether the market is overbought, oversold, once you've defined where you're going to put your buy order in. Now, exactly the same is for the inverse with the double tops, but we're looking at oil, which created a double bottom. So you need to see that when markets look their weakest is when they turn. Again, that happens time and time again, over and over. So what you have to do is you have to really believe in what you're trying to achieve. You have to really understand the way the markets work. And this is where we come in. You know, we will not only be teaching you the correct way to trade, we will be hand-holding you through the 2-year period and mentoring you through the 2-year period, so that you actually understand. And after 2 years of me in your ears, I think that you will actually get it, because I'm very, very, hot on patterns, and then I think everything else follows. So we go back to the oil chart. Now, what happened when you saw this go down again? Remember, you've got the spike up, not a bad close. You've made the top down on that day, not a bad close. Not a good one, but not a bad one. Now, people say you trade on the breakout to be safe. Well, you can. However, you can put your buy order in just prior this low, just prior it, and then you're going to take a run up to the trend line. Now, the neckline of this pattern normally creates a move lower. I say normally because that is what it does. So, and it did it here. It went back down to this area here and then took off, breaking through the neckline, and off we went. Obviously, when you get a market like this, yes, there are fundamental reasons that produce these big moves higher, but back here there wasn't any then. I mean, God almighty, we've lived with bad news for 5 years and patterns still work. So what you can do is you can cover to here, look then to go back into the market when it retraces, and then buy the break, and then put your trading stop in. Okay, so if you want to have a look about what I said on oil a few weeks ago, then obviously please feel free. It's up there on our site, and I will be giving out more about chart patterns over the coming weeks. I mean, obviously we're nearing the summer slowdown, which is quite good, because in that summer slowdown I will be able to spend more time producing more videos, getting you ready for the September-October course. Anyway, have a great day, and I will be back with you very soon.